Goeiedag, good day, fellow South Africans and citizens of the world. And for the silver and gold buffs, have I got a story for you. Well, it looks like after the lockdown, you might be sitting on an absolute golden egg. And I'll tell you why. Over the past 20 years, this is a report by an analyst. Over the past 20 years, I have been working with hundreds of brokers, thousands of individual clients, and seen every type of trader come and go. The most successful traders have had an underlying thesis built behind some market that, if timed right, has led to riches. However, the recurring theme amongst those who have failed had thought that their opinions were bigger than the market. Those that succeeded had the patience to slowly build their position using technical analysis, and when the market finally shared the same opinion as theirs, it was something magical. My opinion on silver remains the same, that once global industrial production recovers from the lockdowns and the market realizes the irreversible monetary damage the Fed has done by aggressively devaluing the US dollar, that will lead to a rush into gold, which will ultimately trigger a massive wave into silver. Remember that silver tends to underperform gold when global industrial production is weak, given silver demand depends 80% on commercial users and only 20% investment demand, while the ratio is inverse for gold with 20% commercial and 80% investment demand. Before we break down the silver market, we have to create a free gold trends macro book, which you should print out. This will provide you with all the quantitative analysis on the gold market, therefore increasing your knowledge of key trends. You can request yours here. Now I'm going to put a link down below this video. If you're into gold and silver, just take that link and you can make a request for the free gold trends macro book. And he concludes by saying, remember, most silver is produced as a byproduct of copper, gold, lead, and zinc refining. While primary silver production in 2019 was 240 million ounces and accounted for just 29% of global silver output. The largest component of global physical silver demand was industrial fabrication, at 510.9 million ounces, or 52% of total physical demand in 2019. The next largest component was jewelry at 201.3 million ounces, or 20%. Now that 20% represents almost the entire year's production of silver. You can see how it's been eaten up. Closely behind was physical investment demand at 186.1 million ounces, or 19%. Then silverware at 59.8 million ounces, or 6%. And photography at 33.7 million ounces, or just 3%. Let me show you a chart, and then we'll talk about that. Looking at that chart, there are two key technical developments. The first is a potential bearish head and shoulders pattern. Before you hear the word bearish and throw me under the bus, this is merely a short-term 7 to 14 days technical setup to help us identify what the next move might look like, while the underlying golden cross of the 50 DMA approaching the 200 DMA indicates that a longer-term, multiple-month, multiple-year bull market may be developing. We have been extensively covering the technical backdrop of the precious metals market in the Blue Line Futures Morning Express research reports. So be sure to stay up to date on the developments by registering for a free 2-week trial by clicking on the link. Well, we ain't going to do that. Okay. That's as far as I go with the subject. But as I've always said, I'm a silver and gold buff. Guys, if you can afford to, even if you just buy physical silver, you're going to be creating a buffer against a falling rand. Please remember to subscribe to be kept informed. Ring the bell for the updates. Please like this video, please share this video, and above all, please stay safe. Bye for now.